Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the trading week of August 21st through August 25th, where the theme for this week's weekly trading game plan is Don't Fall into the Jackson Hole. The Federal Reserve is holding their Jackson Hole Symposium the end of this week, and we expect President Jerome Powell to be talking. I believe it's on Friday, and we don't want to fall in the Jackson Hole. So we'll talk about strategies, trade ideas, etc., to prevent us so we don't fall in the Jackson Hole from this Federal Reserve Jackson Hole Symposium and all the commentary surrounding that. So let's get started. Welcome, MD. Thank you for joining us for our live stream today. Hope you're doing well. So here's our Google document with our notes for part one of our weekly trading game plan. We keep our notes for our weekly trading game plans in publicly accessible Google documents, so you can refer back to our notes. We also have links to bonus videos, the tools and resources we use for our market analysis, our strategies, trade ideas, etc. You can find a direct link to the notes for this week's weekly trading game plan in the description box below. And we store all of these Google documents for our weekly trading game plan notes in a publicly accessible Google Drive folder. So you can refer back to the notes for this week as well as our notes from previous weeks. Again, with links to bonus videos, strategies, trade ideas, etc. And you can find a link to that Google Drive folder also in the description box below. Welcome to Ricky Khan. Thank you for joining us. Hope you're doing well. So first we'll jump over to FinBiz. We'll see how the markets ended up on Friday. So we can see they started out down and then eventually recovered almost to even. So the Dow eked out a slight gain. NASDAQ almost broke even. S&P almost broke even towards the end of the day. So even though it started out relatively bearish, we ended up slightly bullish. Advancers and decliners was very close to split, 50 to 40. Very few new highs, only 10% new highs, 90% new lows. So again, bearish overall. And we've now only got 30% above our 50-day moving average and 70% below. So again, somewhat bearish. And we've got 43%, 56% above versus below the 200-day. So again, generally a bearish trend. Seeing the heat map, most of the mega cap techs were negative, as well as Tesla. We had some retailers, some healthcare positive. Energy, as we'll see, it was strong, one of the stronger sectors. Welcome, Alan Krantz. Thank you for joining us. Hope you're doing well. So some of the quick news: C-suite turnover, wildfires in Spain, global stock markets on guard. China pain, so we'll talk about China at some point. NASDAQ lower, Treasury yields pull back, and the NASDAQ falls for 4 days in a row, longest weekly losing streak since December. So we see oil had broken slightly below 80, and then it recovered that 80 support level. Now it's again sitting at that 80 support level. Natural gas, as we'll see in the futures, again pretty range bound between 250 and 3. Gold, again, we'll see in the futures it looks like it's testing its most recent low and then bouncing off of that, as well as silver. Welcome, Spacula. Thank you very much for that super chat. We greatly appreciate it. Glad to see you again. Hope you're doing well. If there's anything that we can answer for you, do in response to your super chat. Again, we greatly appreciate it. Spacula, again, it's been one of our long-time great supporters, and we appreciate all of your help and support, Spacula. So again, we can see the Dow futures are slightly positive, S&P and NASDAQ slightly negative. You see the treasuries now are well above 4%. As we've been talking about for a long time, we expected the treasuries to Treasury yields to be up over 4%. They've surged up, and we've still got a relatively inverted yield curve, although it is flattening. So we see the 10 years up 4.25, and we'll see the impact that has had on record mortgage rates for quite some time as well, and the impact on the housing market. Welcome, Easy Mike, as well. Thank you for joining us. So now let's look at each of the indices. So we see, SPY had tested the upper trend line, bounced off. Now we've got, a discernible downward trend. We've got some support, 414, 415. We look at a little bit longer and we see it's also broken down below the moving averages. So again, definitely a downward trend. Saw a little bit of a correction, recovery on Friday. But again, the trend, definitely rolled over and turning down. We'll see how it behaves against that support. Again, we see the longer term moving average. So again, it's reverting to this mean of this moving average. Again, we kind of expected that. We talked about that for several weeks when it had gotten so extended above the moving average that one would expect a reversion back to that mean, and we're now seeing that. We could expect some support at that level, and we'll have to see if it breaks down to the longer term moving average after that. NASDAQ, again, very similar. Again, peaked, rolled over. Now it's reverting to that moving average. Again, it got so extended. So again, we would expect, possible test of that moving average, some support at that level, and then we'll see if it breaks down and tests the longer term moving average. Again, didn't get quite as extended, but we see the same type of behavior. It's just sitting above that moving average. So again, we would expect it to test that moving average, gain some support, and then we'll see if it breaks down or if it bounces off of that moving average and trends back up. Look at the Russell, IWM, and you see that, very pronounced reversion right back to the moving average. Again, as we've been talking for several weeks, kind of what we expected, particularly given the seasonality for August. And again, we'll talk about that seasonality again when we get to our strategies, the seasonality of August, the summer, etc. Look at the VIX. VIX got a little bit above 18 at one point. This is the futures. So the futures is showing the VIX above 18. The actual VIX had popped up a little above 18, now broke down back down below 18. So I think the last I saw it was sitting at about 1730. So we see that general trend of an increase in volatility starting, late July, early August. So again, I would kind of expect that trend of increased volatility to continue August, September, again, due to seasonality. And again, we'll hear what the Fed has to say coming out of Jackson Hole. And again, I would expect a little bit of volatility around that commentary. But again, we see it looks like the VIX has finally bottomed and we've got a seasonal trend upward at this point in time. Welcome, Boren. Thank you for joining us. Ollie in the Bay. Glad to see you both today. Thank you for joining us. Okay, let's look at the groups, the sectors from Friday. So we see, it was a pretty much risk-off tendency. The strong sector for Friday was energy, defensive, and utilities, all pretty defensive, risk-off. Real estate slightly positive. So again, risk-off. We had cyclicals and communication services strongly negative. Technology pretty break-even. Financial slightly negative. Again, for the week, technology was the top performer with energy second. Cyclicals and real estate were the biggest losers in financials. Again, we heard a number of downgrades of regional banks in general, so very negative sentiment in the banking sector and financials. For the month, energy is positive. And although communication services was positive for the month, we see that sector rotation out of communication services towards the end of last week. And we see this sector rotation into the defensives, utilities, etc. So again, sector rotation back into utilities, and we'll talk about that as one of the strategies going forward. So if we look at the industries, welcome Flip of the Shippa. Thank you for joining us. Glad to see you as well. So we see energy, uranium, very positive, oil and gas, positive, some retail, some REITs, most negative. Some materials, copper, again, with the weakness in China, China economy, a lot of your basic materials get hit with that. It's a little surprising that oil didn't get hit harder with that negative economic data coming out of China. Silver, negative. Solar, gold, slightly negative. For the week, all we have is some retailers, some semiconductors, mostly probably NVIDIA. So very few positive for the week. Most negative, again, your basic materials, aluminum, silver, gold, solar, very negative. Some pharmaceuticals, negative. Banks. For the month, mostly energy, positive. Again, solar, very negative sentiment. Solar, silver, and gold, and we'll talk about that potential rebound in the futures. Again, silver, gold, solar for the quarter, and energy positive for the quarter. So again, we can kind of see that theme. Okay, let me bring up the economic calendar. We'll look at the economic data from last week. I'll point out some highlights, my comments from last week, and then we'll look at the economic data coming up for the following week. Let me grab a quick drink, and then we'll review that data from last week and going into next week. Welcome, Walter Lyons. Glad to see you. Hope you're doing well. So just some notable Tuesday, as we talked about last week, we were kind of talking about retail sales as we had expected. Retail sales for July was positive, much more positive than expected. Again, the control month on month for July was very positive, year on year, more positive than expected. And even ex-autos and gas was positive. So again, as we kind of expected, retail sales was positive for July. Possibly attributable to Prime Day and the associated sales that other people put on during Amazon Prime Day. And again, this is sales data, so actual income is helped out by inflation. Higher prices means higher sales. It doesn't necessarily equate to higher profits. Going forward with retail sales, we might see August might not be too bad either due to the back-to-school sales. But then once we get into September, that might be kind of weak. And then we get into the holidays, and we've got Black Friday and the holiday season, November, December. So again, August might not be too bad for retail, but September might be weak. And then we'll see how the holiday season shapes up. Thursday, we've got had Jobless claims, continuing claims was slightly higher than expected. Initial was slightly lower than expected. The weekly average is a little bit higher than expected. So again, job market continues to be resilient. People are, generally able. We're having fewer initial claims. Some people are finding jobs. Some people are not able to find jobs. But again, the job market's resilient, so the Fed can continue to hike without fear of high unemployment. And again, we'll talk about what I kind of expect coming out of Powell's speech and some of the commentary out of Jackson Hole. So let's see if I missed anything else from this week. And then we'll highlight the upcoming economic data, and we'll talk about the Jackson Hole Symposium. So here's some news. Saudis are cutting. U.S. is producing more. That's what that article says. I didn't want to read it. I just wanted to close it. So we talked about retail sales. We can see the bond auctions pretty much as expected. Business inventories are flat. Housing market index a little down from expectations. Again, when the 10-year bond yield goes up, mortgage rates go up. So that's going to impact the housing market, although I still hear home builders are buying down that mortgage rate. So there we see the mortgage rate jumped up to 7.16, and mortgage applications have dropped or negative. Building permits were positive, better than expected. So again, the new home market remains reasonably resilient. Housing starts were better than expected. Again, I believe that's because the home builders are essentially subsidizing the mortgage. Industrial production was negative. So again, the economy slowing, but still resilient. So oil inventories dropped more than expected, but that didn't really seem to impact the oil price much. It rebounded back over 80. And got jobless claims. Natural gas storage is a build greater than expected. So, and the natural gas price did drop down to around 250 something. So it did decline somewhat, but it's got good support. You see the oil rig count continues to drop. I think I saw a article that says we've now got fewer rigs than at the start of the Ukraine war. So the oil producers are continuing to reduce production, which also will help bolster the oil price. So that 80 price seems to be pretty good support, as we'll see also in the futures. So next week, got home sales again on Tuesday. So we've got some Fed speakers early in the week, Monday, Tuesday. Again, mortgage rates, building permits. So again, housing data. Oil and natural gas inventories. And then as we see, the Jackson Hole Symposium starts on Thursday, runs through Friday, that's 24th through the 26th, actually runs through Saturday. And as we'll see, Fed President Jerome Powell is expected to talk at 10 a.m. on Friday, and that will be a speech coming out of the Jackson Hole. So again, we'll talk about our strategies, about don't fall in the Jackson Hole. How are we going to play trade around these commentary and the Fed Chair Powell's speech coming out of Jackson Hole on Friday. Also got Michigan sentiment last time. That actually did have an impact on the market, inflation expectations, the strength of the consumer. And then we see Jackson Hole continues on Saturday. So, and then, we'll get further commentary coming out of that the following Monday. We've still got earnings, so we'll look at earnings while we're here. Again, this is the long list of the earnings calendar for next week. Earnings matter. You can see the impact both of missing. Anyone that misses on earnings gets punished significantly, even if they meet or slightly beat expectations. That's probably pretty baked into the market. And what they say going forward, if they cut guidance, have any warnings about future earnings, then that would be very negative for that stock and stocks in the same sector. So got Zoom, got BHP, oil and gas, Nordstrom, some retailers. So again, I'd highly recommend you go through the list if there's anyone you're looking to buy or trade out of. Got some 3D printers and a DM. And again, in sympathy plays in the same sector. So again, we've got a whole video on earnings matter and how to trade around when earnings matter again. So I'd highly recommend you go through the list. I'll show you a near term list in a minute in Webull that we can see. So I believe NVIDIA is on the 23rd, and that's going to be closely watched. Yeah, I believe that's what we found last time was NVIDIA was on the 23rd. Here we are, Wednesday, the 23rd. It's NVIDIA. So again, I expect some, AI hype. We've also got Snowflake, Autodesk, Splunk, etc. So we've got a number of AI-related, potentially AI-related stocks reporting on Wednesday. They might get a boost depending on how much actual revenue that they can say they're getting from AI or future revenue they project from AI. So again, I expect some AI pump coming out of the NVIDIA earnings. Welcome, The Crow. Thank you for joining us. Hope you're doing well. So again, keep an eye on earnings, listen to the earnings, see what potential impact it has on your stocks, potential buys, and also for sympathy plays. So we talked about that the Jackson Hole Symposium, Economic Policy Symposium, is the 24th through 26th. And when we get to our strategy section, we'll talk about, how do we don't fall in the Jackson Hole and get hurt by what might be coming out of that Economic Policy Symposium. Okay, let me grab a quick drink and we will look at the market screen in Webull. Okay, just a quick reminder, if you're not already using Webull, they're still offering between 6 and 12 free stocks when you open a new account, deposit on any amount in your Webull account. Again, as you can see, we use Webull for market analysis, due diligence, the majority of our trading. So again, if you're not already using Webull, you can get free stocks and start your investment journey with Webull. And if you use our affiliate link in the description box below, you can also help support our BeachBum trading community, which we always appreciate. So this is the market screen on the online browser version of Webull. I like to use this for some market analysis. We can see advancers versus decliners from Friday. So again, we did eke out slightly positive for advancers, and the percentage of advancement was very small, balanced by a small percentage of decliners. Again, we continue to see the inflow of money into NYSE, outflow out of the NASDAQ, particularly on Fridays. So again, that's been the trend for a while, into the NYSE, out of the tech-heavy NASDAQ. And we've seen that again for several weeks now. Again, you can find the near-term earning calendar by going to this calendar section in the market screen in Webull. Again, we've got a whole video on how to use this market screen in Webull that you can reference via the link in the notes. So again, you can see the near term, who's reporting earnings in the near term in this calendar in Webull, and whether it's going to be before market open, after market close. You can keep an eye on that here and see who's reporting next and what impact that might have on stocks or sectors that you're interested in. Okay, we'll look at the industries for the week. See government, industrials, positive, semiconductors, somewhat negative, communications, negative, uranium, that's interesting that that's showing negative, except for UEC. Utilities, we're going to talk about utilities in our strategies. Natural gas, utilities, mostly negative. Telecom negative, so generally negative. Not a whole lot of positivity. Some coal positive. Okay, ETFs for the markets. So right now, short China, a couple short China, long emerging markets, long the Russell, long small caps, so a reversion in small caps. So for the Russell, slightly up on the Dow, balanced by a short on the Dow dogs, so pretty balanced. Mid caps positive, small caps positive, so it looks like they're rotating again into the small and mid caps who've been lagging. Short on Bitcoin, so we saw the big dump in Bitcoin. This is a positive short on the VIX, so again, we saw the little bit of a pop in the VIX. Long Russell, long small cap. Short China. Short, got a kind of a balance in Europe. Short the Q, so a heavy short on the NASDAQ. Industries, positive industrials, utilities, energy, split on healthcare, pretty split on basic materials. Technology, slightly positive. Defensive, so again, risk off, defensives, utilities, energy, real estate, somewhat positive. We'll see this rebound in wheat and corn, rebound in platinum and palladium. Again, rebound in wheat, corn as well, agriculture generally. Uh, 3 to 7 bonds, Asia, high yield, yen, euro, pound, slightly positive. So we'll see, the dollar strengthened somewhat, was sitting around 103, broke down a little bit below that, but holding pretty steady at 103, as we'll see in the futures. So let's look at the futures. So again, we see that, roll over in all of the indices. Looks like, the S&P actually broke down below that previous low just before July. So we had that run up July into the beginning of August. Again, seasonality says August is slightly negative. And we saw it, pretty pronounced rollover once we got into August in all of the indices. Again, more pronounced in the S&P and in the NASDAQ. Again, in the Russell, looks like, the Russell's going to test the previous lows. So rollover in the Nikkei. Saw a pretty dramatic drop on Thursday, Friday in the European markets and the DAX. So again, a lot of volatility. We've seen this drop and then bounce before. Again, same way with the DAX. Saw that drop and then bounce. So short-term trading might be an opportunity for shorter-term day trades, short-term traders in these areas. Again, we saw the VIX, work its way up. Now the futures are, above 18, so should have some support around 18. We'll see if it can break above 20. Again, oil, WTI's got good support at 80, so broke slightly below 80, held, regained 80. It's holding at 80, so now it's kind of bouncing range bound between 80 and 85. Natural gas, again, been range bound between 250 and 3 for a while. Tried to gain some support at 275. That broke down. But again, I expect it to be pretty, range bound near term. Longer term trend probably up. Again, due to seasonality. Can we see these declines in silver, gold? Looks again like they're testing their previous low, their previous July low. I expect them to bounce off of that support level, and we'll probably get a recovery and trend back up. So again, possibly short-term opportunities in gold and silver. And when we get to the ETFs, you'll see we have a number of ETFs you can use to play shorter term trades, gold, silver, etc. Again, we got bounces in platinum, palladium, a little bit of a bounce in copper. Here's the bounce in corn, and we got a little bit of a bounce on Friday in wheat. So again, they got near their previous lows and bounce. So again, you can see those support levels are potential opportunities to play those kinds of bounces. Lumber swung back up. Then we see, the bond yields have been, steadily increasing now into the low fours. So prices have been declining. We talked about a couple weeks ago this seasonal trend that we're watching and looking for an opportunity, when bonds finally do bottom out. And again, following that seasonal trend, we're going to expect yields to continue to go up, prices to continue to go down until they finally reach a bottom and swing back up. And then again, we talked about some strategies for playing that turnaround in the bonds. Again, we saw the dollar strengthen up over 103. Looks like, it's above or very near that previous top when it, dropped last time. So we'll see. Looks like it might be rolling over. So again, that will be impacted by other global currencies, other global events. Again, the Japanese are doing bond curve control. They're loosening that control a little bit. That caused a decline in the yen. Now we're seeing a little bit of a bounce. So we'll see what impact that has on the dollar and then consequently on dollar-denominated commodities. So I hope that all helps. Again, just a reminder, none of our content should be considered financial advice. We're not financial advisors. All of our content is for education and hopefully some entertainment purposes only. To bring up our ETF sheet, but I want to jump forward to our strategies for how to don't fall in the Jackson hole. Talk about that for a few minutes, and then we'll come back to our ETFs in a second. So again, our theme for this week is don't fall in the Jackson Hole. And as we pointed out, the Fed's Economic Policy Symposium in Jackson Hole, scheduled for the 24th through the 26th. We've got Fed Chair Powell talking at 10:05 on Friday. So again, I expect a lot of people will be waiting for any commentary coming out of the Jackson Hole. What are people saying in terms of, are they going to continue to raise? When might they raise? And there will be a lot of speculation. Also might get lower volumes going into that. People might be waiting for some output from that Jackson Hole symposium. And again, other than, press commentary coming out of some interviews, potentially coming out of Jackson Hole, the main event will be when Fed Chair Powell speaks on Friday at 10:05. I left the link. The link is in a couple places here in the notes, so you can read more about the Economic Policy Symposium, the Jackson Hole Symposium in general. You see the title is titled Structural Shifts in the Global Economy. So that is the focus, and hopefully, in my humble opinion, I'd like to hear Powell talk about more of these structural shifts in the global economy, what impact the rates of the various central banks have, and that impact on the U.S. economy as well as currencies, etc. So we'll hear if his focus in this speech is really on the topic of the global economy and the impacts on the U.S. economy. And he may focus more on that than talking about, Fed rate hikes and, uh, when they might potentially cut. There's still, speculation when they might start cutting. And I expected him to just reiterate their previous messages, which is inflation is still too high. The U.S. economy and the job market remains resilient. Although the job market might be coming into a slightly better alignment. Again, their target of 2% inflation and their commitment to reach that 2% inflation goal. So we'll probably, again, my expectation is some kind of hawkish talk from Powell to convince the market that yes, they're committed to get inflation back down to 2%. They're going to be data dependent, so they're going to wait for further data to indicate, exactly when to hike. And they'll probably reiterate that each meeting is a live meeting, and they'll decide at each meeting, if they need to hike, and if so, by how much. So again, I believe you're going to hear a lot of commentary along those lines, reiterating their previous messages, and then focusing on data dependency. We've still got, significant data coming out before the September meeting, and the September meeting is September 19th and 20th, and then we've got one at the end of October. So the speculation right now is I think the probability is for the next hike to be in November. But again, that's going to move around based on the commentary coming out of Jackson Hole and from Fed Chair Powell. So again, don't fall into this trap of the Jackson Hole of shifting based on this commentary, as it'll be mixed. And again, I just expect them to continue to reiterate the things that they've said: higher for longer, data dependency, 2% inflation target. So love to hear everyone else's opinions, commentary. What do you think? And then we'll be listening to this commentary as it comes out. Again, I'd be very interested in more feedback from them on the impacts of the global economy on the U.S. economy, and how we might be able to take advantage of some of those shifts in making money trading going forward. So we'll see. So our other strategies that we've been talking about, again, is the seasonality of August. That, August tends to be a slightly down month. We've seen that. We saw the rollover of the market starting in August. Again, August, September's tend to be downtrending, and we've again talked about that. We have a number of strategies about how to make money trading in August, and you can hear more details of that in the videos, links in the notes documents, also the summer doldrums. So again, we've seen kind of choppy, low volume trading. Again, in my humble opinion, this environment is probably better suited for shorter term traders, day traders, scalpers, etc. And again, we have a number of strategies about how to trade a downtrending market, and you can search for those if you search our channel for bear market using inverse ETFs, etc. You can see our strategies in those regards. We expect that to continue August, September, and then we expect a turnaround coming, October, November, December. So that's, our longer term strategy. Again, in the meantime, we have strategies for benefiting from a downtrending market, as well as looking. We talked about our shopping list for sales, back to school sales in the market, etc. So have your shopping list, and we'll talk about that probably again tomorrow as well. We'll look at the technology sectors in a minute. I'll come back to ETFs. Also tomorrow we'll talk about dividend payers, and we'll talk about our option strategies in this current market. Wanted to get to some questions and also jump back to our ETFs. So one of the questions we had from last week was Milan Todorov asked in a comment on part 2 of last week's weekly trading plan that's relevant to ETFs. So again, I thought I'd talk about this as we go over to ETFs. He asks, when you are choosing between different ETFs in the same sector for a long hold, what are you looking for? Funds under management, expense ratio, NAV, yield, volume, or performance? So again, I'll jump over to our ETF Google Sheet. And just a quick reminder, if you would like access to this ETF Google Sheet, as well as our dividend payers and our puts ROIC Google Sheet, you can gain access to those 24/7 by joining our Patreon at either the all access or VIP level. So again, once I identify a potential opportunity, I'll go and look in the ETF Google Sheet. And to try to answer Milov's question, let me look at one I've looked at recently that we're currently watching, which is cannabis. We've got a comparison of MJ versus MSOS. So to answer his question, what do I look at first? Firstly, let me say, generally, I'm not generally holding ETFs for a long hold. Again, we primarily swing trade, so I'm looking for something that's near a support level. It's got a good risk reward. So again, to answer that question, the first thing I look at is the risk reward and the risk reward ratio. I'm looking at support and resistance levels, both from a very near term as well as the 52-week. And also the bottom to top. But again, I'm focusing on the near term. What's that opportunity? We can also see the ones highlighted in green are showing near within 10% of its support level. So that would be, again, my first choice would be which one presents the best risk reward, near term risk reward profile. So in this case, since I've got two to choose from, and the near-term risk reward of MJ is slightly better, I would probably choose that one. Another factor I consider is the optionality. So one that is optionable, if I'm comparing two that are almost the same risk reward opportunity, I would choose one that's optionable over one that's not optionable. Again, other factors, funds under management. Yes, the composition of the fund is important, but again, We kind of know if it's in the same sector, the compositions are going to be similar, but you can see the perspective and compare the compositions of the actual holdings of each ETF by clicking the link over to the ETF database, looking at the different holdings. So another one to talk about along these lines is China. So there are different funds in China that you can see, and these do have different compositions, different holdings. So in this case, it might be important to understand the holdings of the different China funds. So you've got Yen, you've got KWeb, which is internet, you've got another CWeb, which is internet, and you've got Harvest. So again, in that case, understanding the composition may be important, whereas one area, the China Harvest might be negative, whereas China Technology might be positive. So in that case, that becomes important. Dividends are somewhat interesting. So dividend yield, also volume and performance. Performance again gets into risk reward opportunity, history. How long. I don't really factor expense ratio in a whole lot personally, because again, we're not really looking at holding them for a long time, so that expense ratio isn't terribly significant. However, if you are planning on investing and holding an ETF for a very long time, then yes, you might want to consider the expense ratio and what impact that would have on the overall performance. So again, I hope that answers your question, Millen. And if you'd like additional information, please feel free to ask us a follow-up question. We do have another video about zombie ETFs, so we would avoid a zombie ETF where it's their assets under management are not appreciating and they're at risk of potentially being delisted. So again, we hope that helps. Again, others, other fellow BeachBum traders would love to hear your feedback as well on, what do you consider when choosing between different ETFs in the same sector for a long hold. Again, different traders are going to have different views, different long-term goals, etc. So again, we'd love to hear your feedback as well. Okay, another topic, another set of questions people had asked this week is related to utilities, and we saw in the sectors we're possibly seeing a sector rotation into utilities. Easy Mike asked about XLU, which is utilities. EKS asked about a specific stock in the utilities sector. So I want to look at our ETFs in the utilities sector and look at some potential opportunities there. And we did, as we saw, we got a little bit of a bounce later in the week. So again, you can see we have a number of utilities in our Google Sheet to play both up and down utilities. So here's XLU. So you can see it, it was relatively near its 52-week low, its support. You can see the risk reward in general. But near term, for a very short term trades, got decent risk reward. Again, if it bounces off that 52 week, it's going to be even better. I like this UTSL. This is a leveraged ETF on utilities. So again, you can see it's getting close to that support level. So again, I think this might be a near-term opportunity in utilities. So again, thank you for pointing that out to us, Easy Mike. And again, I want to talk a little bit about the seasonality in utilities and look at this for an opportunity. Let's look at XLU, which is just the sector spider on utilities. So this is utilities companies in the S&P 500. So we can see it recently broke down through support. So, pretty negative move here. We can see the previous bottom was right before, in the middle of October. And I think there's a seasonality opportunity coming up. So again, we kind of see in the middle of October last year, before November, we had a bottom in utilities, and then we had a bounce trend upward up into the rest of the year pretty much. And again, it looks like we might come down, at least test these previous support levels, and then maybe we'll get a seasonal rotation back into utilities. So again, I think we see XLU is still, pretty high. There's not a lot of risk reward in just XLU. But again, I think the seasonality, looking at a downtrend headed into October, and then a potential bounce going October into the end of the year. Again, we've got, negative sentiment August, September. In general in the markets, and then positive going forward. So I think that might help to boil that up. So again, keeping an eye on these utilities, I think it's a good idea. Again, I think the seasonality factor is what I want to keep an eye on. Again, it broke down through support, so I expect that to be resistance now, and we'll see, how far it declines going forward. So keeping an eye on it going forward in terms of seasonality. If you want to, play these short-term bounces, when we get a risk off, you're going to get a bounce in the defensive sectors, and that's going to include utilities. So I hope that helps. And again, you can keep an eye on the various ETFs. Again, once we get that opportunity, I would be looking at this UTSL as a potential way to play that bounce in utilities. And then again, we've got an ultra short if you want to ride that seasonality down. So I hope that helps. Also wanted to answer EKS's question on UGI. So UGI is a specific utility. So this is a regulated gas utility. So we can see, it's been downtrending for quite some time. See, it pays a 6.46% dividends, got some high debt. They're losing money. So I don't like that, particularly from a utility that's paying a dividend. So they potential at risk of a dividend cut due to that. Sentiments generally pretty negative. So again, it looks downtrending. Looks like this has been downtrending. So it got, just a slight bounce from that previous October rally. So there's the bounce again. We see that in this individual stock, and it's been downtrending since that. Again, very negative. So again, I wouldn't terribly be interested in UGI specifically. Again, I don't like the fact that they're a utility and they're losing money, and that would, in my humble opinion, would put that dividend at risk. So again, in specific, I don't like UGI. Don't like that specific utility, and again, I think it's probably. My humble opinion, I would rather play ETF and to play the utility sector. So again, I hope that helps. CKS, if you have other factors you wanted to consider with UGI, or if anybody else has experience or opinions relative to UGI, please let us know. So you guys are having a great conversation in the chat. That's a great thing about our BeachBum trading community is we got all kinds of helpful traders helping each other out in the chats and the Discord, etc. So I apologize if I missed most of the conversation, most of the questions. If anybody has a last minute question you'd like to throw back up in the chat, again, I'll try to go back through and address any questions that I missed, in tomorrow or in future live streams. But, if you have a question that's pressing, I see you talking about Hawaiian Electric. Again, they're, in trouble like PG&E from California in the past. Again, I wouldn't, again, it's a high risk is what I would say in my humble opinion. So again, I appreciate all of you that joined us in the chat. I would encourage everyone to continue the discussions in our Discord. Our Discord's free to join. You can find a pre-invite to our Discord in the description box below. Again, we continue these conversations. You can ask questions in our Discord. You can also contact us. We have a number of social media sites, other communities, Reddit community, Facebook group, and you can find links to all our social media sites on our homepage, beachbumtrading.com, bum without the U. So again, if I missed any of your questions or if you have any questions that we can help you succeed in your trading career, make money trading, you can contact us in our Discord, via social media, etc. And please let us know, how can we make our weekly trading game plans, our videos, our community of more value to all of our BeachBum traders. Please let us know. We'll do what we are able. So again, I appreciate everyone joining us today. I apologize if I missed your question. Again, please follow up and ask again if I missed it. And I hope you all will join us again for part two. For part two of our weekly trading game plan for the trading week of August 21st or through August 25th. And again, the theme is don't fall in the Jackson hole. And tomorrow we'll talk about selecting our top swing trading stocks to watch, stocks in our bullpen, additional trading strategies, trade ideas for the trading week of August 21st through August 25th. So thank you again, everyone, for joining us in the chat. Hope to see you in the Discord and hope to see you tomorrow. Same bat time, same bat channel, 10 a.m. Eastern time for part two and selecting our top swing trading stocks to watch. Thank you again. Have a great day.